said they're basically going to give you significant amounts of free leverage as an equity investor. That industry sector would be trading significant multiples. Unfortunately, mining has been out of favor right now. So I think once you start to see more concrete, and you will start to see that after we get back from Labor Day in September and October, you're going to see some pretty material announcements come through. And again, I think that will be clearly demonstrating this free leverage that's available. And again, I think is another potential re-rate opportunity. So for all those three things happening for the next 6 months, it's going to be a pretty exciting time for the stock.
Mark, welcome. We are just digging having you here today with us on Mine Stock Talk. Now, for retail investors like us who might be discovering Canada Nickel for the very first time, you've built quite a sterling reputation in the mining sector. So could you just walk us through your journey and what sparked your vision for Canada Nickel?
Sure. So I worked outside mining for a decade in private equity and management consulting. I joined 𝐂𝐀𝐍𝐀𝐃 in 2001, which at that time was the world's largest nickel company. I was head of commodity research, so I've been following nickel as a commodity now for 20 plus years. I took over as head of strategy in 2005 when we tried to merge, and later that year, we tried to merge 𝐂𝐂𝐃 and Falconbridge to create a Canadian-based diversified metals company to compete with BHP, Rio Tinto, and so forth. Unfortunately, Vale took over, ended up being able to take over 𝐂𝐂𝐃, and Xstrata, then now Glencore, took over Falconbridge. So I went to work for another company, Quadra Mining, for a few years after that. And then I joined a bunch of, basically the ex-𝐂𝐂𝐃 senior management team became the board of a company called Royal Nickel back in 2010. We took that public at that time, and we took the project called Dumont from resource stage right through to feasibility. And the value creation thesis at that time was, nickel prices went through a massive spike back in the mid 2000s. We got up to, $20 plus a pound. And there had been a bunch of nickel, mostly laterite projects sitting around for quite a while, and they all got funded and developed. And if you looked in the project pipeline, it was basically empty. So we knew we're going to go through some tough times in terms of nickel pig iron and Indonesia ramping up production. Eventually, we're going to get to that point where, we can't depend on Indonesian supply, controlled by Chinese companies. We are going to need more Western projects. So that was the initial thesis. Unfortunately, it took a little longer than it did. But in 2016, we took advantage of the fact that the market in early 16 was, even worse than where we are now. We had 20 million market cap, $2.5 million in cash, and we bought a company called VMS Ventures, which owned 30% of the Reed mine operated by Hudbay. And then we also bought a mine called Beta Hunt, which at that time was a nickel mine, but the opportunity was the gold resource underneath. And so we generated 3 times our return on that Reed mine in just 3 years, which was great. And then Beta Hunt, we acquired for effectively $12 million in cash and paper, plowed in another $70 million or so. And today, that asset, we believe could be 150 to 200,000 ounce gold producer, which is where it is. And that company ultimately got acquired by a company called Westgold for $1 billion, most of which was the value of that asset. So made some smart acquisitions. Dumont, we ended up selling off to a private equity group at that time. But I left RNC in 2019, and a week later basically got some call from guys who had made this discovery north of Timmins, and that's how ended up at Canada Nickel.
Wow, that's quite a journey getting there. And so you get a phone call. He mentions this property that's in a very good jurisdiction, I'd say. How would you say you've positioned Canada Nickel as advancing, you call it the next generation of high quality nickel projects, which is quite a statement. And what's your approach, and why do you think of it that way?
Yeah, so what was interesting about Crawford, I almost didn't go to the meeting because there's a few small mines around Timmins that get basically polished up by promoters every nickel cycle, and I thought this is what's happening. But the thing that we had figured out on my old Dumont project is the geophysics actually gives you 70 to 80% of the answer around the quality and the scale of the deposit that these types of deposits that you're drilling. So I went to the meeting. The guy who's now our VP Exploration, Steve Balch, was there. He had done some work for my old company on another project and learned from our geologist this kind of secret sauce that we had figured out. So he had flown the right geophysics. They drilled 4 holes that looked a lot like my old Dumont project. And so literally it took us less than 30 minutes to make a decision to get the company going. So again, we need new nickel projects. People, I know people like high grade nickel, but the reality is the last high grade deposit that had more than 1 million tons of nickel at more than 1% grade was Voisey's Bay 30 years ago. So if the world needs nickel for electric vehicles, if the world needs nickel for stainless steel, and nickel's demand still growing, at over 5% over the long run, and it's grown at 9% since 2020 per year. We need these big deposits. And so, what was great, literally Crawford was a half an hour drive up the road from Timmins. You had all the infrastructure in place. And the reason we talk about in terms of projects is that again, we used the geophysics. We basically knit them together, and we identified 20 targets around Timmins. Nickel deposits do occur in clusters sometimes. And so we did 35 deals in 2021, 2022 to assemble the land package we have. And so we're on track by the end of this year to have 9 separate resources. Most majors don't have 9 good projects in a safe jurisdiction, with the scale of the resource we have. But that, this is really what we're unlocking. It's like going into Sudbury in 1895. It's like going into the Atacama Desert in Chile in the 1940s, or the Southwest US back in the 1880s. For nickel, that's the kind of scale we have around the Timmins district today.
Can you just touch quickly on the strategic positioning for the EV and stainless steel markets?
One of the key pieces is, nickel's traditional use has been stainless steel and alloys, and that's grown at 5 to 6% a year over long periods of time, and continues to grow at those kind of rates. Then the EVs, nickel is the material in an EV battery that gives the battery the longest range possible. So in North America, where we drive big cars and trucks, and people who drive luxury cars, want to have a big battery with lots of range, and those batteries have lots of nickel in them. So the way we're positioning the project in terms of the product we'll ultimately produce, we can put all of our production into the EV market. We can put all of our production into the stainless steel and alloy market. And so that gives us lots of flexibility in terms of, how things evolve, and we're not necessarily a one-way bet just on the EV market.
Gotcha. Okay, well, let's dig deeper into Crawford. Now, you've called it a potential world-class nickel sulfide operation. So help investors understand what makes the project so electrifying.
Ooh. We're the second largest nickel reserve in the world with Crawford. If we were fully ramped up today, we'd be the 3rd largest nickel sulfide operation globally, just behind Norilsk in Russia and Jinchuan in China. And we'd be the Western world's largest nickel sulfide operation. Again, 20 years ago when I was at Inco, we used to talk about Western world, and then we stopped talking about it, because we were one big global trading bloc. But today, Western world, with the geopolitics of what's happening today, are very important. And so again, the reserve base that we have at Crawford, the scale of the operation, is the kind of thing that the majors would ultimately want to own at some point in the future. And the great thing again is, with the entire district, with these 9 resources, there are several deposits which we think will be bigger and better than Crawford. And so what we engineer at Crawford, our view is we can, in the future, look to cut and paste that at different operations and really build potentially the world's largest nickel sulfide district.
You recently put out news that mentions the Man West and Man Central properties, and wondered how that impacts the overall project.
Crawford, the one thing with the lower grade deposits is you can't transport that material very far before the grade drops off. So Crawford on its own will be a standalone project. And what we envision is we have our Reed deposit, which is about 20 kilometers away. That's a big enough scale to support its own very large mill operation. We'll have another one of those in that Man area, those deposits that you just talked about. And depending on how the drilling goes further south, you could easily see another milling operation down the south there. So each one of these deposits, we think, would likely be able to support a very substantial standalone operation on its own.
And these projects are all in we'll call it the Timmins area. So can you just give the viewers kind of a view of some are familiar, but like the type of infrastructure and maybe a little bit about the communities, even the First Nations?
Sure. I mean, that's one of the big pluses here, and something I think investors don't pay enough attention to. It's great to find some resource, but it's great to find it in a place where you can actually develop a mine, because ultimately developing a mine is where you're going to realize the value. So So number one, yeah, as you said, Timmins has literally all the infrastructure you need to build a big mining project. There's highways. One of the main rail lines that crosses the country goes right past us. The main natural gas pipeline for the country goes right through the region. And then we've got a whole series of communities. There's 60,000 people who are within an hour's drive of the mine site. So we'll have a workforce that drives home every night, and that's a lot cheaper, a lot more productive, than a fly-in, fly-out operation that most new projects have today. So, having that infrastructure base is great. The second big advantage with Timmins is, again, this has been a 100-year-old mining camp. There's a half a dozen mines operating in the region today. So the communities and First Nations really understand what that impact benefit trade-off is, having mining operations locally. And so we've gone very quickly through the permitting process. We're the first mining company to file an impact statement underneath the 2019 legislation, which is a sad comment on the pace of mining development in Canada today. And big chunk of the reason we were able to do it was that community and First Nation support, and to reinforce just how strong and what a great job our team has done in terms of building those relationships. One of the key First Nations communities has taken 20 million of their own capital to invest in the company. So we think that's one of the first investments by a First Nations group in a critical minerals project anywhere in the country.
Well, that definitely will help all over the map. It's important to us too. We like following what the First Nations are doing in the business level, and that companies like yourself show respect for them that way.
Going back to Crawford and the numbers, which are impressive, targeting about 60,000 tons per day, I think you were saying initially.
Yeah.
Obviously, there's a massive potential for expansion. So that obviously makes Crawford one of the largest nickel sulfide mines in the world. How did you unearth such a massive opportunity?
So the key pieces, and that's the nice thing with this type of deposit, is the geophysics literally give you the outline of what the resource is. We had figured that out at my old project at Dumont. Sort of Crawford was effectively the test to confirm it. The reason it works very well is the process that generates the minerals that we can recover also generates a certain amount of magnetite. And there's only a certain amount of iron in the rock that type of rocks hold. And so we zero in on that. And that basically, from again, in that first meeting, we looked at the dimensions of it and we kind of said that it could be this big, and it turned out to be that big. And what's been exciting is when we acquired those other properties and started drilling them, we have a 98% success rate in terms of hitting the kind of mineralization we expect with it. The other big thing with these type of deposits is the host rock has this wonderful property that it spontaneously absorbs CO2. And so we developed a process that, as we're processing the material through the mill, we can inject CO2 and actually store 1.5 million tons of CO2 per year, which, in addition to being one of the largest nickel mines, also makes us one of the largest carbon storage facilities in the country.
On the carbon concept, which we've been reading quite a bit about, is that something that you can monetize?
Yeah, so we can basically, we were approached as soon as we started talking about it. We were approached by some groups, and again, there's very large companies who you could probably guess who are involved in providing gases to consumers and would be focused on helping those to decarbonize them. So we could be a large carbon storage facility in that respect. We're actually taking advantage of our own carbon storage facility because, in addition to building the mining project, we're building a nickel processing facility. And because we have that magnetite product that has nickel and chromium in it, we're going to turn that into semi-finished products for the stainless steel and alloy steel sector. And we're basically going to be capturing the carbon out of those processes and using that storage. So we'll be able to produce a low carbon steel product as well.
Wow, that's amazing. So that gives you another cash flow element versus just simply the metal itself. But recently you completed, I believe, your bankable feasibility study, and which involved front-end engineering design, etc. Can you tell us a little bit about that and what that should mean to the retail investor looking at the stock?
So we completed the feasibility study, and then we just completed what's called the FEED, that front-end engineering design. So we announced those results earlier this year. So the front end engineering design is the next stage of beyond the feasibility study, where you basically are doing the engineering, enough engineering so that you can place orders for long lead items. As you move towards a construction decision, it's important to be able to have that lined up and ready to go. We work with 𝐂𝐀𝐍𝐀𝐃. Again, I would encourage investors to look at the engineering firm that does the report. There's a number of there are firms that effectively just mostly do studies, and then there are companies that also build projects. And 𝐂𝐀𝐍𝐀 is one of those ones that have built a bunch of these big process open pit mine mill operations, and they've got a great track record of delivering things on time, on budget. So we are very happy with where the feasibility study came out overall. And again, I think investors should take a lot of comfort in terms of the work that's been done to date on that.
Oh, that's amazing. We're actually learning a lot more about the importance of feasibility studies, because it's just not something that's really crossed our mind in the past. Take a hard look at them and what it means for us as an investor. So it's really helpful. It's been really helpful for us in making decisions.
No, that's good. No, and again, you really do need to look at the company and the person who signed off the studies. And if you can, the thing I always encourage people is just look at other benchmarks to be able to say, can you find a similar project, and look at the capital and operating costs, just to get a comfort level that, yeah, no, the estimates in there are reasonable. And we benchmark very well against other, open pit operations of that scale that you could look at and that are operating today in British Columbia.
Just going back to Crawford for a little bit longer. Now, you've called this year a pivotal year for the project, and you're talking a construction decision by the end of 2025, which is obviously groundbreaking progress. Can you just give us an update, or of what progress is, or where things stand at this time?
The big pushes are permitting, engineering, and the funding. So engineering, completing that FEED study was a key milestone in terms of being able to be in position to place the long lead order when we need them. So we've made good progress on that front. On the permitting front, we submitted the impact statement at the end of last year, when we expect to get that main federal permit by year end. We were quite happy with the comments that came back. We ended up with, I think, just over 30 questions. We'd fully permitted our previous project, Dumont, and at that time we had gotten 3 rounds of over 100+ questions. So the IAC, the agency, has made efforts to go a lot faster and be a lot more streamlined. And again, versus 10 years ago, I can tell you that they are, materially better. So we're just in the process of getting those responses together. We'll get that in, and then, they'll work through the final approvals that's there. And then on the funding package, we announced last year we had got a $500 million letter of intent from Export Development Canada, another $500 million from another Canadian financing institution. EDC agreed to be the mandated lead arranger. And so the great thing about that is, we have a big project, and so, we'll be spending lots of money that is for qualifies for export credit agency financing. And so with EDC's endorsement, we'll be able to basically tap that market for the entire debt facility that we need for the project, which is great. So we expect to have that in place by year end. The other piece I would sort of highlight to investors is, for Canadian critical minerals, this is a once a generation opportunity to be able to get a bunch of free leverage from the government. So, one of the things we're working closely with is the government at both levels. We qualify for 2 types of refundable tax credits: the critical minerals credit, which gives you 30 cents on the dollar, basically of free money. And we also, because of our carbon storage, qualify for a carbon capture and storage credit of 50 cents on the dollar. So again, this is a big project. It's $2 billion. It's a $2.5 billion funding package when you put in cost overruns and financing costs. $1.5 billion of that will be the debt, which come primarily from export credit agencies, and that $1 billion equity check. Over $600 million is refundable tax credits. We signed a deal a year ago, January, with Samsung SDI, where they can have offtake to make batteries if they buy 10% of the project for $100 million. And then the remaining $300 to $400 million, we're looking to sell another 10 to 20% of the project. But we have basically government funding from the Critical Minerals Infrastructure Fund. We can line up from the Canada Growth Fund. The Ontario government just announced a critical minerals processing fund that has $500 million in it. And then there's a whole series of other global government funding that's available. So as an equity investor, you can literally get almost 90 to 95 cents of the capital that's required from government. So the nice thing with this in terms of getting to that construction decision, we expect to be able to do that without having to do a big equity raise.
That is incredible. I'll say your financing stack is really a different kind of cat to look at. And I would encourage people to really look at how you've done that and how it will progress. And also, maybe you can mention in the structure and in the financing that you do have some other partners in with you that are some pretty serious mining entities. And also, you had mentioned a First Nations involvement in this entire part. Will you go to market with a stock issue, say, as the stock rises in price at some point?
No, I mean, we just we completed a few tranches of financing through the spring. At this point, we're in good shape, and we think with government funding kicking in this fall, that'll provide what we need to do going forward. And so, as you said, we've gotten great. And, again, if people are looking for endorsements of the story, 𝐂𝐀𝐍𝐀𝐃, who's now the world's largest gold miner and Canada's largest mining company, they're a cornerstone shareholder. 2 Januaries ago, we had Anglo American come in as a significant shareholder. Unfortunately, they're focused more on copper and iron ore now, but they continue to hold our shares. They've been approached by people seeing if they've wanted to sell them, and they're quite happy to hold on to them. And so they like what they see with the story. Samsung, as part of that offtake deal, also became an equity shareholder, and then the recent 𝐂𝐀𝐍𝐀𝐃 announcement. It's a convertible note, so it can convert into equity, which would give them about 8% of the company. So again, it's great to have a project that has a single endorsement shareholder when we have 4 of them.
We've talked a little bit about the carbon capture, and which is really great because that's something that we were going to touch upon anyways. But with the ongoing uncertainty with tariffs and IRA compliance, how does the net zero positioning give Canada Nickel a competitive edge?
Yeah, so the big plus for us is overall, we're fortunate with nickel that the U.S. doesn't have, and really it has one nickel mine that gets processed in Canada. The U.S. needs our nickel. The other good part is Europe also needs our nickel, and so the added ability to deliver a low carbon nickel product, would put us at the top of the list in terms of what people, particularly in Europe, are looking for in terms of nickel supply. So it's a big plus, and as well too, the car companies, and again, there's a pretty good correlation between the value of the brand and their importance of getting clean, low carbon nickel, and so for us, it's a big advantage in terms of which company they choose to get their nickel from. So we're looking forward to seeing how that unfolds. Right now we assume zero financial benefit in terms of producing that. But again, as things advance and given how much nickel, most of the 2/3 of global nickel supply comes from Indonesia and comes with a very large carbon and environmental footprint. So, we're in a very good position.
Yeah, you are. And you mentioned Indonesia. That's a complicated piece of the puzzle, but can we get your view, say, on the nickel market? It's been volatile, as we know.
Yeah.
Lately, not as bad, I suppose. But you maintain a confidence in it in the long run. Obviously, the EV has something to do with it. What is your current outlook, say, a few years out?
The big thing with the story right now is people have been negative on nickel for the last couple of years. And so if you read some of the headlines, you think, oh, nickel prices must be at multi-decade lows. The reality is today, we've been bottoming out around $15,000 a ton, or, just under $7 a pound. That's nearly double where we bottomed out back in early 2016, when we did those transactions at my old company. And if you had told me in 2016 that the next cycle bottom was going to be at this level, I would say that's excellent. Going forward, the key piece here, and 2025 is a pivotal year in a lot of things, and it also is going to be a pivotal year in the nickel market. Indonesia's been rapidly expanding. They have resource that actually 𝐂𝐀𝐍𝐀𝐃 drilled off back in the late 60s, early 70s that Chinese companies are now exploiting. They've been rapidly growing that production over the last decade. But the key piece now is Indonesia is effectively an OPEC of nickel. That's one country. They control 2/3 of supply. The export of nickel and stainless steel helped turn the country into getting a trade surplus and current account surplus from deficits in both of those accounts. And so They've pushed up ore prices locally within Indonesia. That's something they have some influence over. It hasn't quite translated into nickel prices yet, but you are going to see them push through. These types of deposits, these laterite deposits that you find in Indonesia, it's basically soggy dirt that's 5 to 50 meters thick over large expanses. And so those kinds of deposits are very easy to high grade. Unlike an open pit or underground mine, you kind of have to take it as it comes. But with these deposits, it's very easy to go pick out the best bits of that deposit. So they've been high grading these now for 10 years. So the reason price floor has doubled is because the average grade, the marginal grade in 2016 was 1.8 to 2% nickel. Today, that's 1.4%. And that grade is only going to continue to go down. So looking out a couple years, we think Indonesia is going to push prices up another 30-40%. They're not going to do an OPEC and quadruple prices like OPEC did at its peak in the early 70s, or they're not going to do what the Congo did and stop exports of cobalt, because that's just, a short-term sugar hit. It's not going to help the market long-term. But it matters to the Indonesian economy to have nickel prices higher. It is a finite resource. It will run out at some point in time. And so it makes sense for the Indonesians to make as much money as they can while that material is being processed.
Let's move ahead and talk about some investment highlights. From an evaluation perspective, how should investors think about Canada Nickel's opportunity? Obviously, the project economics seem rock solid. So what's the investment case?
In terms of why invest right now, number one, we are at this pivot point in the nickel market where Indonesia, I think, is going to be a net positive to the market going forward and help move prices higher from here. And that's already starting to unfold and is happening. It's good to get in now because I think you'll see some moves before year end. Number two, in mining investors who are familiar with the Lassonde curve, we are at the valley of death where companies, after a PEA, you spend the time doing the permitting and engineering, and you start to climb up that second value leg of the Lassonde curve when you get permits, when you get your financing in place, when you move towards a construction decision, and all that is going to be happening here in the very near term. And then the third piece is this government funding. In any other industry, if the government said they're basically going to give you significant amounts of free leverage as an equity investor, that industry sector would be trading significant multiples. Unfortunately, mining has been out of favor right now. So I think once you start to see more concrete, and you will start to see that after we get back from Labor Day in September and October, you're going to see some pretty material announcements come through. And again, I think that will the clearly demonstrating this free leverage that's available. And again, I think is another potential re-rate opportunity. So for all those three things happening for the next 6 months, it's going to be a pretty exciting time for the stock candidate to be there. So,
well, Mark, you've shared with us some golden nuggets of wisdom, and we really appreciate it. It's been highly informative for us, and obviously our investors that are watching will obviously get the benefit of it as well.
Calling all savvy investors in mining and resources? Seeking the inside track on Canada Nickel? Look no further than minestalkers.com for cutting-edge knowledge and real-time stock updates. Visit for the insights and stay for the gains. Seize the opportunity and explore the magic at minestalkers.com. Uncover new investment possibilities today. Don't forget to hit the bell below to subscribe and then like and share this video. Let's get the word out there.